Odie, Jacob here. Today we're looking at ticker symbol CACI in the IT services industry. They have a 9.4 billion market cap on 10.9 billion enterprise value, founded in 1962. Pretty solid growth, honestly. Not quite, but almost double revenue over the last 10 years with very low margins. Huh. Their gross and operating are the same. That can't be right. Why is that the case? So they're saying cost of goods sold, there's no sales general and admin, anything like that. Let's see whether that's true on a different site. So all the financials over here, cost of goods sold, SG&A, net income about 3 to 4. Okay, so they must have just combined the cost of goods sold and SG&A together. All right, so gross profit, pretty solid. I mean, oh, that's cost. Oh, okay. Never mind. This is 30%, 35% net income, still that 5 to 10% range. Balance sheet shows just over $100 million cash on hand with 1.6 billion, 1.7 billion long-term debt. That's a good amount of debt. Let's see what that is in relation to cash flow. So their 5-year average, maybe 500 million in relation to 1.6 billion. Okay, that's not a concern. So they do not have that much debt in relation to their free cash flow. But I do still like cash on hand, as that could just be, that's for you as an individual as well. It's good to have cash on hand for when opportunities arise. Obviously, if you got a good amount of money, it's good to have a little cash on hand just in case opportunities arise that require a good amount of capital. And so for them as a company, you don't necessarily want to have to go into debt to fund projects. Maybe, if you have 500 million cash on hand, it's a $1.2 billion acquisition, 700 million in debt for them is about 1.25 years. I don't think that's a concern, but again, it's good to have cash on hand for opportunity purposes. But again, they don't have a whole lot of debt in relation to their free cash flow, and so I'm not entirely worried about that. But let's go on to make some assumptions here for revenue growth. I mean, what did they do with their free cash flow? Do I see that on this one? Acquisitions is a hefty amount. You can see a billion in acquisitions here, 106 million, 356 million. So a huge amount of cash flow going towards acquisitions. And then share repurchases is a little bit. Okay. No dividend. All right. So for revenue growth, I think growth will probably be better than the market here. I think I would probably not be surprised with maybe 6% if we're including a good amount of capital allocation going towards acquisitions. And again, you're hoping for acquisitions that make sense for them, increasing margin. You don't just want to have acquisitions hit the top line. You want to hit that bottom line as well. Because cash flow and earnings per share are what's, really creating and pushing business. So let's do 7 and 8. Share change. Let me go back. I'm just more used to this. So this layout. So cash flow. Well, how much have they been doing to share repurchases? Okay, that's a good amount. 1% would be about 90 million offset stock-based compensation, 130, and that in relation to free cash flow is a 25%. I'm good with that. Terminal PE with that type of growth, a lot of it's coming from acquisitions. They've been pretty decent at increasing margins through acquisitions, so they're being somewhat advantageous through it. Let's give them slightly above market average here and 15% return, 17 terminal PE, saying that, maybe they deserve, return on invested capital is not great. Let's do market average at the end of 7 years. And we get to a price that needs to fall 46% before you get the return we're looking for here. I think it's an interesting business, interesting company. Uh, I definitely need to do more research. I think these margins on the operating side are fine, nothing to break home about. I've seen IT services businesses with, you know, 20, 30%. So I'm sure they don't do the exact same thing that they do. But, with that return on invested capital and operating margin as low as they are, I'd, I think the business is very solid, but I'd still need to get the return I'm looking for here, and we're just not there yet. So hopefully you enjoy the video and have a great rest of your day. Thank you.